Hi everyone, welcome to Smack the Markets weekly market wrap, the weekly wrap up for the week ending 26th of October 2018. So this week was a little bit more unusual than we're used to. A lot of different factors making it a little bit more challenging to find setups and trader strategies. We had the usual rhetoric from the UK and the EU from the Brexit negotiations not going exactly where they should be. We also had a lot of stuff coming out of Italy about their budget and it not quite meeting the rules of the EU. So that's causing some volatility in the euro. And then we had one of the biggest sell-offs in the US indices in quite some time. So all those factors made it quite an unusual week to trade. A lot of the sell-off in the US indices, the money seemed to be flowing into the yen. So most of our trades this week actually were on the yen markets. So this one was on Tuesday, and it's against the Australian dollar. The yen was quite strong that day, big sell-off on the US indices, and we tried to avail of some of that. So the market here, if you look at the 4-hour chart, we were looking for a break at this level, and a continuation on down on the higher time frames. So a break at this level and a tighter entry. Now, we managed to find the tighter entry on the 15-minute chart. You can see it here, that candle stop above the high, entry below the low, and first target at the blue line. Now this looks like it got there, but it actually missed its target by 2 points. So we were down -1 on that one. The exact same time, there was a very similar setup again on the yen versus the Canadian dollar. Again, this is the 4-hour chart, a break at this level here, and we were looking for a push lower. This setup was found on the 15-minute chart. You can see here we put the stop behind the swing high, entry below the low, and the first target was the blue line. Obviously, we didn't get there either. Now, these both happened at the same time, so you would have chosen one or the other and not double your risk on a Japanese yen trade. So we took the Australian dollar one, and we ended up -1. The following day was Wednesday, and there was big news out of the Canadian dollar that they were going to increase their interest rates, and this caused a lot of strength in the Canadian dollar. And the nicest one we found was the US dollar against the Canadian dollar. And as you can see there at the arrow, that was the 4-hour chart. There's a level there of 130.50, and you can see it. There's a few touches there going back a little bit. If you come down a little bit lower, you can see that it's actually even nicer on the 15. So you have the level, you have two pivots, you have the sell zone, and you have the Fibonacci sweet spot. So looking for a 15-minute candle here and stop above the high, entry below the low, and we got that, and a nice quick 1-to-1 a few hours after news. This one actually went to 2-to-1, but we just took 1-to-1 on it. So that was that. The next one was the pound versus the Japanese yen. Again, more strength in the yen on this day. This was Thursday. Another day with sell-off and the US indices. And the pound has been generally weak more often than not this week as well. So we found the nice setup, pull back into the 45 level, just touched off it, rejected, created a nice bearish candle here on the 4-hour chart, but there was also an even nicer one on the 2-hour chart. So stop above the high, entry below the low, and your 1-to-1 would be well before the old lows, and that worked out quite well, quite quickly. We took a 1-to-1 on this 1%. It actually went on to currently I think a 3-to-1. So that gave us 1% on that one. So that leaves us with a 1% in the plus for this week. We had 2 winners, 1 loss, and quite a challenging week. All those factors made it a little bit more untechnical, and we like technical markets. And there was earlier in the week, there was some setups we set, but they never triggered, they invalidated. And I think it was quite, that was the way the week was really. So a good week considering, and looking forward to next week where we'll have more technical markets, hopefully, and a lot more activity and a lot more trades. So hope it helps. Until then, thank you very much.